All right, it's that time again to jump back into the Austin real estate market, February 2023. Let's do it. All right, my name is Paulie Campanero, owner of the Vision Realty Group in Austin, Texas, and today's video is around what's really going on in the greater Austin area. Travis, Williamson County are the two major counties that incorporate the Austin, Texas area. But today we're going to talk about what's going on. What's happening in Williamson County? Is there still depreciation happening? What's happening in Travis County? Are we still falling off the cliff? Because we've just experienced so much depreciation in Travis County. I'll get to all those numbers soon. And so we're also going to talk around, so stick around to the end on where we're going, because there's so much happening literally week to week in regards to the real estate market. So we're going to jump into all of the facts now. So since January, so these are February numbers, it's mid-March, and again, these numbers come out mid-month from the prior month. In the county of Williamson, we're down 6% month over month. So we were $437,000 median sales price in January. In February for 2023, Williamson County dropped to $410,000. Now, I normally start this video talking about Travis County because that's the central of Austin, Williamson County, the more peripheral county and rural areas. Tends to be some more rural areas. Sorry, Round Rock, Cedar Park, and Leander. But the Williamson County has just been kind of hanging tight. For 3 months, it's been kind of doing this, hanging very close to the median sales price month over month, not really experiencing a whole heck of a lot of depreciation. But look, since the peak of the market in May 2022, now with this 6% depreciation month over month, we're down 20%, and they've caught up just about to Travis County since the peak of the market. So 20% depreciation since May 2022, and while there's been quite a bit of stability in Williamson County, here it is, just January over February, month over month, some tragic numbers at 6% depreciation. That's really quite high. I think the highest percentage of depreciation we experienced twice actually last year in Travis County was 7% depreciation in just 1 month. So that's a pretty staggering number. Honestly, I'm a little surprised that that number is so high, as the feel of the market, as somebody who lists a lot of property, is that there's been more showings, is that there's been more activity. And so we're going to jump into those numbers specifically as well in a second, but 6% depreciation definitely is cause for concern in regards to how much more depreciation, Paul, is the market going to experience. What's going to happen in the coming months? Because I hear this all the time from buyers and sellers, is that, especially sellers, is that the spring market is the market where things really begin to pick up. Traditionally, that's true. The last several years, that has not been true. The spring months have not been traditionally bigger and better. And so we're sliding into here a market where the interest rates are shifting. I'll get to that after we cover Travis and Williamson County. So things traditionally have just not been to par in regards to spring being better. Last year, that wasn't the case. The year before that, that wasn't the case. And so this year's firming up to be that spring actually could be more depreciation. Okay, so let's look at the numbers for Williamson County. Now, I'm on my cheat sheet. This is my wall of fame. You guys can't see this here, but I have every month since last May 2022 up on my wall of fame here in regards to the market activity for Williamson and Travis County. So I'm looking at my notes here. And so Williamson County down 6%, 437,000 and 410,000. Closed sales actually up 226 homes from the prior month, and new listings down approximately 90 homes month over month. So closed sales are up. There's been more homes sold month over month, but new listings down 90 homes. Active listings down 100 homes, and pending sales actually down 100 homes. So we saw a little ramp up in activity on closed sales, but then new listings, total active listings, and pending sales all down in Williamson County. And so while the inventory nudges downwards, buyer activities nudged upwards. And now this is a pretty interesting dynamic, as the interest rates just been kind of all over the place. And just this last week, even we've seen some of that, but time out. I won't get to that till towards the end, so we'll cover that. But there's definitely been incentive in the ebbs and flows of the interest rate, and how when it's dipped, it's caused more activity. And we have experienced some of that over the last 30 days. Okay, so for Travis County, very interesting. Travis County basically stayed even month over month from January to February. December to January, it was down 4%. So look, since the month of May 2022, we said Williamson County had experienced 20% total since the month of May, including that 6% from last month. Travis County down 24% since May 2022. So they're getting pretty close now. Before, Travis County was kind of really further and farther beyond in regards to depreciation than Williamson County. Williamson County's starting to catch up here. So month over month in January to February, we've experienced some stability, which is kind of how this depreciation has gone. It hasn't gone straight down. It's gone down, even, down, even, down, even, down, even. And we anticipate there's going to be a little bit more of that to come. Stay tuned to the end here. Hey, oh, by the way, subscribe, follow, share with your friends. Hey, it is a huge blessing to be able to communicate and share with you. And so when you subscribe, it really motivates me to bring inside market information that you typically and readily don't get online or cannot access online. So I appreciate you subscribing, sharing, and following. Okay, so Travis County, even month over month on the average, on the median price point, $499,000. Literally, it was just a matter of like $500 in movement month over month, January to February. So even $499,000 January to February. Closed sales up 200 homes, like Williamson County, and then new listings even, active listings even, pending sales negative 100. So similar to Williamson County, while Williamson County was down in active listings and new listings, just a hair, 90 to 100 homes, we're seeing new listings stabilizing, active listings stabilizing, pending sales falling a little bit. Maybe it was those high interest rates from moving from February to March, January to February. And so, and then closed sales up a tick for both counties. And so the months of inventory in both homes sit at approximately 2.5 months. Now, on paper, 2.5 months is a seller's market, period. And yet we're experiencing not that. To an extent. Okay, bear with me. So 2.5 months supply is typically a seller's market, and that there's a lot of apprehension and anxiety on the market, as we see average days on market, 81 for Williamson County, 82 for Travis County. That's a long time for a 2.5 month supply. That's basically over 2 months on average. Properties are sitting on the market, yet there's only a 2.5 months supply. I've been in real estate almost 20 years. I've never seen this dichotomy of activity in regards to the days on market being so high and the active, the months of inventory being so low. Now remember, months of inventory, 2.5 months supply, means that if all the homes on the market today sold and no other homes came on the market, it would take approximately 2.5 months for all those properties to sell. So that's the months of inventory statistic. So with the average days on market, the length of time it takes to sell a home at 81 or 2 days in Williamson or Travis County, and the months of inventory, 2.5 months. It's showing us that while there's not a lot of inventory out there, buyers are taking their time, and they're being a lot more picky about what they choose, and they're watching closely for properties on how other buyers are responding to them. as far as is there an offer coming right away? Does it sell over the weekend? How much activity is happening? And so they're not so quickly jumping on properties with a very relatively low supply. Now, remember last year there was like a 2-week supply. So a 2-month supply feels like a gold mine for buyers. And yet overall, a 2.5-month supply is actually a really low level of homes on the market. And that's in conjunction with what's happening nationally, is that there's just not enough homes for sale for the buyers that are looking to buy them. And so for homes that are priced right and have all the bells and whistles and features and benefits and amenities in the right neighborhoods are getting multiple offers. I just had a property in Crystal Falls, a golf course community in Leander, where we had multiple offers and we sold well, it's not closed yet, so I won't tell you, but we got great offers. And we definitely didn't go below asking price. And so that was a fantastic scenario. We had another property just a few weeks ago in Round Rock where we had 5 offers and we sold for almost $30,000 over asking price. Had another property in Cedar Park that just a couple weeks ago sold at asking price, and there was tons of interest in the property. So when you're priced right and you have the right strategy, talk to a professional, you'll be able to still be able to take advantage because the market inventory is low. And if you have the right strategy and marketing, it is still possible actually to get multiple offers and even, who knows, sell over asking price. It's happening. Now, it's not standard for that to happen. It is still the exception in this market, but it still can happen. So when people ask me, is it a buyer's market or a seller's market, Paul? Well, depends. The statistics are going both ways, and depending on how you position your home to sell on the market, it can sell very quickly over asking price, or you could sit there a long period of time and have a realtor beat you over the head week after week after week, lowering the price where, by the way, as a seller's tip right now, let me give you the best piece of advice that you can get if you take away anything on this video. If you're gonna list your property, please, for the love of all that's holy, don't try to sell high. It doesn't work. Okay, it's never worked. I've never seen it work in regards to being able to sell for the highest price possible. So when you leave room for negotiations, okay, that just actually shows people that you're priced too high, and they see that. They can clearly see that. They see the activity around. They're especially looking in a market that's slowed down now. And remember, even in a market like the one that we just came out of, where it was ridiculously white flaming hot, the properties that priced too high didn't sell for those big chunks of over asking price value, as well as the properties that started at or even maybe a little bit below the market value. And so those properties that got aggressive in pricing at market value or a little bit below market value are the ones that actually sold for 50, 100, 150, 250. I sold a property for $325,000 over asking price in North Austin. Okay, so don't start high and try. Okay, you want to start at what the more recent sales have been closing at, or in this market, actually, you may need to start lower because the pending sales we're seeing, here's the closed sales, here's the pending sales, and the active properties are either very close to the pending or they're below pending. What's that tell us? The market's still moving downward. Okay, here we are, the analysis, the end of the video in regards to what's going to happen. We're gonna lose another 5 to 10%. It's going to happen. The interest rates have been all over the board. They shot up over 7% just yesterday or the last couple days. They shot down below 6%. I mean, that's a 1% swing in 30 days. The Feds are losing their minds. Another conversation, another video that we won't get into right now, but it's causing this volatility in the market, right? Where people are just not sure what to do. When the market, when the interest rates dip down, then buyers are taking action and we're seeing an uptick in sales. And a 1% swing from below 6 to over 7 is just volatile, right? It's just dangerous. It's all over the place. And so we're not quite sure what's gonna happen with the interest rates. And if you have a crystal ball, please email me or shoot me a call, and I'd love to rub it and find out what happens, because because there's people saying that the interest rates are going to go further down. And that's going to help stimulate what's happening. There's people that are saying that the interest rates are going to go further up, and that could cause more hostility towards buyers who want to buy, but then that obviously affects their affordability. So that's why you see buyers jumping on things when the interest rates dip down, is because they want to lock in those lower rates because there's volatility. They're not really sure what's going to happen. And so what's going to happen? Subscribe, share, follow, please. Okay, so what's going to happen is that we're going to lose more value. We're going to lose approximately 5 to 10%, could be more in my opinion, as a professional who can see the writing on the wall, because we're listing a lot of properties and working with a lot of buyers too, we're seeing ground level action that you can't report in a news article for 45 to 60 days at a minimum, usually 90 to 180 days. The news is just behind on what's happening boots on ground for activity. There's no statistics for showings. You're not going to see that anywhere. But as a person who lists a lot of property, the Vision Realty Group in Austin, Texas, who lists a lot of property, we actually do have those statistics. They're just not nationally published or not published on a grander scale. So we are seeing the statistics that we personally track in regards to that there's more showings, but yet the closed price is here, the pending prices are here, and the active prices are close to the pendings or below the pendings. And that clearly tells me we're headed for more depreciation. The interest rates don't help. The media never helps. Stay away from the media, please. I know you want to know what's going on. It is important to know some of what's going on, but their job is to sell, and fear sells. And even with this recent banking crisis, look, there's really, if you really look at it and do your homework, there's a lot of exceptions in regards to what happened with those two banks versus a grander scale of what could happen. And there's always risks and consequences and what happens in the financial world and realm in regards to how that affects what's happening in real estate. And yet, remember, fear sells. So it doesn't help. So should you sell your home right now? Unless you plan on, you're comfortable holding that property for 4 to 5 years, sell now. I'm telling you, I've said this in other videos, sell right now. Because if you think that the May or June is gonna be better, you will have already lost another 10 or 15% by May or June. Sell your home. Okay, and if you're an investor and you want to liquidate to be able to go buy other properties, we're working with lots of investors who call us up. We love those phone calls on people to be able to talk about what's going on, provide the consultation, because everyone's a little bit different. And if you need to sell, you need to sell right now. If you're thinking about selling because you want to utilize that capital to further your investments and create more market velocity, where you have that equity from your property because you've refinanced or because you've sold and you're buying other properties at the bottom of the market, good on ya. That's a great move. Okay, now if you're a buyer and you're thinking, should I buy right now? Well, depends. Do you need to buy right now? Do you plan on holding that property for more than 7 years? Okay, 5 years really still could be a good buy, but you really need to consult a professional and have an intelligent conversation in regards to where you're really at. Because if you plan on holding a property long term and you can afford it, then look, the interest rates are going to go down. We've seen that happen. It's happening. You'll be able to refinance at some point. But the key is affordability. Can you afford the payment? Does it make sense for you financially? And if you're going to hold it for a longer period of time, look, there's still opportunities because you're in a market where properties are 30% off. They're about to be 40 to 45% off, in my opinion. Hey, it's always important to stay tuned on what's going on. So I appreciate you continuing to stay tuned and to be able to have a conversation and to be open to be able to share with you, hey, your vision, our mission, Vision Realty Group, to be able to serve and bring you the information that you need. That's our first job, so that you can figure out what's best for you. Stay tuned.